Hello traders and welcome to Forex Friday. Stu on here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So we are looking at our trade reconcile for this week. But before we do that, we're going to be looking at one topic as we always do on a Forex Friday video. What we're going to be looking at the topic today, we're going to be looking at swings, swing high and swing low. Okay. At the moment, currently, right now, based on this topic of swing highs and swing lows, we are on a smart money trade on cable. All right, we entered at 130.36 and we're riding the wave at the moment. We entered it on the high of this bar where you can see the green line over here. At the current moment, we've trailed the stop loss. We're almost a little bit in profit. Okay, no matter what happens, unless there's a big gap, we'll still be able to capture a profit. All right, so we're currently up about just a little bit less than 600 pounds at the moment. Okay, so let's go through this topic today, which is called swing highs and swing lows. So let's take a look at this example here, right? Now, what is a swing high or a swing low? What are swings in general? So let's take a look at this definition first. As Mark Douglas once nicely said in one of his talks and presentations, he said, for example, if you take a swing high example here, as indicated by our smart money indicator as a swing high, if you were to take a look at that particular point, all he says is that a swing high is particularly one point where in these millions and millions and millions of participants, especially in the Forex world, not even one buyer wanted to buy 1 pip higher than that particular price of 13118. Okay, not even one buyer wanted to buy it even more, just 1 pip even higher than that price. And at that point, what happens is that because there's no buyers, no demand at all coming into the market for buying it any higher, then price then drops from that point. The sellers then sell it cheaper, and so that they convince the buyers to buy it at that price that they want to sell cheaper, and then the sellers continue to drop it as confidence in that instrument drops, whether it's cable in this example or it's gold, commodity, whatever it is. Price movement is the same universally. Traders, you must understand this concept, very important. So in essence, what happens is there's not even one buyer wants to buy it more higher than this particular price. Then the selling continues, buyers then buy it more cheaper, not much enough confidence, and then at a particular point where you have quantified, as our smart money will confirm that as a swing high, and then after a point it hits a support point where the sellers fold their hands, and not even one seller at a swing low point, not even one seller at a potential swing low point want to sell it any cheaper than that price. And that's because they have confidence that its worth is not less than that. So at that particular point, then the buyers, because they really want that product, because they must want it to buy it off the seller, then they buy it off that particular price, and then starts the buying pressure once again. Okay, so this is what then creates the swing highs and swing low points. So swing high is created because not even one buyer wants to buy it 1 pip even higher than that particular price. And in terms of a swing low, is that one seller does not even want to sell 1 pip lower than that particular price. Okay, so that's how swing high and swing low form. Another way of explaining that, or the definition of those points, are supply and demand levels. Then when demand is high at the swing low point, then the price starts to rise. And basically when demand is high, or when the supply has gone out, and then of course supplies increase or whatsoever, then the demand reduces, and then we have the drop of that particular price. So you can see it either way. I usually prefer, in my own opinion, to look at this particular point, which Mark Douglas said about one buyer or not one seller existing. So that is a definition of swing high and swing lows. Now, what is then the concept? What is then the concept of a potential swing? What is the concept of a potential swing then? Okay, now think about these traders, right? Most critical thing over here, you must quantify your swings. If you do not quantify your swings, especially if you're swing traders, if you do not quantify your swings, then your results won't be scalable, won't be reproducible. So important. In fact, the last coaching session that even I did as well, I reminded our client about that particular point, because if you do not quantify your swings and you're a swing trader, your results are redundant. You cannot scale them, you cannot reproduce them. So critical. You cannot have confidence over your results as well, and to producing the positive equity curve from time to time. You won't have that. So concept of potential swings, after you have identified and quantified your swings. So what I want to do is, in this example, like even before the smart money indicator flags up to me a swing low or confirms a swing low, later down the line, I want to enter even before it does that. So for example, this bar here can become a potential swing. So I want to get it early before the sell-off begins, and then finally the arrow pops up on smart money confirming that as a swing high. Okay, that's what I want to do. So the concept of a potential swing is basically before the swing is confirmed according to your parameters. As far as we have seen, according to the open equity concept, smart money indicator is one of the best open equity producing indicators. All right. So further on, to elaborate on the concept of potential swings, what's happening at a potential swing high before it is confirmed according to your parameters and according to our smart money parameters? What is actually happening is that sell stops are increasing in the market. Okay, so more people are putting entry orders to enter for the low of each of these bars, and that is driving the market more further down to fill those orders more than the buy stops. Okay, remember, when you go short, you also have a stop on the top, which is buy stops. All right, and then you have a sell stop to enter as well. All right, so you have both of these things. Whichever is higher is what will get filled first. Whatever is higher is what will get filled first, because do remember, who decides the order of filling the orders? It's the broker. And how does the broker decide it? Very simply, on the commissions that he can make. Because just like a real estate agent, the more property the real estate agent sells, the more commissions he will make. So likewise, the more transactions the broker makes, more volume he sells, then he will make more commissions as well. Just like the whole economic structure, just on more sales, more economy growth as well. All right, so that's what we are looking over here. So in a swing high, in a potential swing high becoming a confirmed swing high, sell stops have to increase more than the buy stops. Okay, and for the selling to carry on further to then become a longer swing like this, which is what the aim of a swing trader is, which in other words, if you know what open equity means, it will tie in with that definition. Then for it to continue on further, then you have to align more parameters and look at more price action studies. Okay, but in terms of just for the swing to get confirmed, this was what must happen. The sell stops must increase more than the buy stops, and for it to have even a more larger swing, then this must increase even more further. Okay, so that's what we are looking at. Right. So what's next? So what else are we then looking at? Okay, so the final thing, once I've taught you about this concept of potential swings, which is then what formulates our potential swing bar. Okay, so for example, right now at the moment, this is a potential swing bar that could become a potential swing high. Likewise, the same for euro dollar as well, traders. If you look at euro dollar at the moment, the same thing for euro dollar over here. This could become a potential swing high as well, as long as its high is not taken out. All right. Got that? Great. Now, the final thing is you all might say, okay, Tiru, all this is great and nice to hear, but, what is the importance of this, and how do we apply this swing concept in trading? Now, as you can see, the whole understanding of these swings, like what the definition of swing high, swing low is, was the concept of a potential swing. All that can be applied in swing trading. So important concepts, right? Now, swing trading strategies, all it's looking to do is capture turning points in the market. Turning points in the market, and the earlier you capture the turning point before it confirms according to your parameters, then your larger your profit move is what is going to be. Largely a profit move. And that's what our strategy profit wave is all about, which is going to be implemented in our LTR room, live trading room. Okay, because over here, as we have said always, we are true traders who want to establish the truth in this industry, to reveal the truth of trading. Okay, which what most people have strayed away from because of what has happened to this industry. We want to shine the light on that. All right, so as you can see, that's why all of our things are based on live trading. Okay, so the concepts what I've taught you today, just a recap, quick recap. So what our concepts I've taught you today is on one of these topics, which is on swing high, swing low. First one is we looked at the definition of what a swing high, swing low is. Okay, so we looked at swings, we looked at the definition of what a swing high, swing low is. Second, we looked at the concept of potential swings, or you may say PSWB, potential swing bar. And then finally, third, we looked at how to apply this knowledge in trading. And let me say that will be in swing trading, and you got to capture the turning point and you got to enter it before it confirms according to your parameters, so as to capture the largest profit move, which what I said we're going to be doing in our profit wave strategy soon to be released. Alright, traders, I think that's pretty much me on this topic. Now we move on to our trade reconcile. Okay, how have we done this week so far? Okay, so let's take a look at that. Okay, so let's start off with Morning Glory. Morning Glory, as you can see, these are the two trades that we took only for this week alone. Some of you have already looked at the video, which is on the 25th of July. We caught an amazing run, 41 pips at 3 lots, and then that got us 1,230 pounds. And then we took a small loss today on cable, and that just drew out a little bit of profits at 21 pips. But do remember, money management is so critical, because I took this at 3 lots, whereas I only took this at 1.5 lots because it was not matching up to our setup. So it's so critical to have that money management in place, traders, because it's all about probabilities. The lower the probability, reduce your money management and have all the rules locked in. I can't stress how important that is. There's only one thing you always look at when you're a trade: risk. All right, money management, very important. So as you can see over here, we had a total of 915 pounds this week, and that's about 91 pips, let's say, right? 91.5, 91 pips. I've rounded it down. Then we move on swiftly to smart money. Now, on an Illy journal, so on a smart money trade, currently we have these two trades still live. What you were looking just now, when you were actually looking at this trade in the running profit column, what I'm really looking at is cable on the smart money trade over here, just over a little bit over 600 pounds right now. Okay, so that's cable and dollar yen, which are running live on the system curve. In fact, Actually, on dollar yen, we actually closed it out quite early, actually, just based on a little bit of a discretionary move on there. But let's see whether we are able to outbeat the system or not. Now, in terms of our other trade reconciles for our other strategy, so morning glory 91 pips, smart money 2 trades open, and then after that, then we got the lift off trade. Okay, lift off, no trades for this week at all. Dynamic breakout. We have a cable trade which is currently open, and we're looking to get about 152 pips of target. Currently, right now, we got a potential turning point happening there against us, but we're going to follow the rules and we're going to stay disciplined. And then we have profit turning points. Profit turning points. We did take 1 trade this week on dollar yen, and we took a hit of that at about 110 pips. Okay, we took a hit of that 110 pips, and then finally we got money bars. Now think about it. Let me just quickly put this up for you right now. So dollar yen, what we were looking to do is, if you take a look at this point over here, what we were looking to really do, we were looking to get on a turning point here before it confirms with our smart money indicator arrows. Okay, but you can see as of now it's still not confirmed it yet. It's still not confirmed. The swing low, the arrow is not popping up according to a smart money indicator. So that's why we took a loss in terms of that. We trailed our stop loss as well to minimize our losses. So that's all fine. Then carrying on after the profit turning points on money bars, which even enters more earlier than profit turning points, we also took another hit as well in terms of 25th July and 26. It got out on the next day itself, minus 88 pips. So trade reconcile, where are we at the moment? So let's take a look at all of that at the moment. So morning glory is 91 pips up this week, and then we have smart money, nothing at all at the moment. 2 trades only live at the moment, and then we got lift off, nothing as well, and we got dynamic breakout, which is a cable trade which is currently open. Still not realized yet. PTP, we had a minus 110 pips, and then finally money bars, minus 88 pips. So we do a total trade reconcile over here. We do a total reconcile. What we have is minus 107 pips. So minus 107 pips is what we have for this week. Do remember, traders, I always say, always minimize and keep your losses small. Okay, don't make them come into very big, like 500 pips, 1000 pips and all that. No. Always keep it small. Always keep focusing on your risk, because the upside will look after itself, because some trades will definitely run. Okay, as you can see over here, even on cable, we're holding on to this trade, and you can see it's steadily rising up. But do remember, all this is still unrealized, and you just have to focus on your risk, because that's what true professional traders do, because they know, because the risk is the one more important thing. As long as you keep minimizing your loss, there'll definitely be some runners which will push your positive equity curve even more further. Okay, alright traders, so that's pretty much that from me. We covered one topic, which is swings today, and then we also looked at our trade reconcile for the week. Make sure that you do these practices in your own trading as well, and learn from the topics and the quality information that we are sharing with you, all in one mission, traders, because together we can establish the truth in this industry. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.